There have been countless indicators which show in the previous cycles once something hits a particular level, the market crashes. It keeps happening. Every single time people are in denial. But the market is ruthless. People learn lessons and then immediately forget. Well, little goldfish, can't say you weren't warned. You came here for the truth, so let me unveil that for you. Today we're going to look at several charts that traders don't want to see. I want to talk about the debt. I want to look at the retail closures that are occurring. Let's begin. U.S. Treasury yield curve. For the average person, this doesn't mean a single thing, but you need to understand that when the yield curve starts to flatten out, traders start wetting the bed. Okay, this is a very important indicator when you look at technical analysis. Like I said, for the average person from Main Street, it may not make a single ounce of sense, but this is an important factor. Keep your ears and eyes open. The Treasury spread, you're looking at this here, and as it gets to the same point every single time, we have a crash. It doesn't matter how far back you go, we have the same problems. Look at the financial crisis right here. Look at the dot-com boom and bust and the times previous to that. You see the same thing occurring. As soon as it, comes down, we have a recession that occurs right after, and right now we are headed into the exact same level. It doesn't have much more time to go, maybe another few months. If history is to be any guide, I don't know what's going to happen, but if history will be a guide, I can see that based on this, it looks like maybe a year at most. We'll see. I wouldn't bank on that, but I would definitely like to see an anomaly take place because it would be, a very long time since that has occurred. Corporate debt as a percentage of GDP. You can see what occurs here as time goes on, increasing. And right now, I really like this term, the central banker's bubble. I've heard it before. They call it the everything bubble or anything else. Essentially what we have here is central bank monetary easing, but it ultimately is encountering the same basic mess, and you can see where this line is and where we expect it to go. When, I don't know, but based on this particular line, we don't have much more time. Wealth economy has decoupled from income economy. This is when you know that you have a very real problem. We could look at yield curves flattening. We can look at how much the central bank has printed and so on. But this is important because you can look at the net worth of US households. Okay, that's the blue line. And then look at the GDP. And things get out of whack. Not so much during the dot-com boom and bust, more so during the housing bubble, but now today completely out of whack. And it reverts back nearly to each other for a brief period. If we do experience that, whenever that is, it could go on for 10 more years, but it's going to continue to skyrocket, and when it comes down, it hits hard. Moving on. Year-over-year change, federal debt held by foreign investors. This is not looking pretty. Okay? You do not want to see that overall when you're an economy that depends on foreign investment. Most countries are like that. They need foreign investors to come in because, of course, if you want to expand at a certain rate, you want to grow, you need to have foreign money. You can't just support yourself. At least that's not the way things work. But here we see that federal debt held by the foreign investors, not good. Now, if this continues, let's just say it year after year after year, who's going to buy it up? Obviously, the Federal Reserve. No worries, though, because the Federal Reserve has this thing. It's called a printing press, and they can create unlimited amounts of wealth. Well, not exactly. Fed assets as a percentage of GDP. So you will see that despite the little blip that is occurring at this time, ultimately, it has just shot right through the roof. The Federal Reserve has been the lender of last resort, not just to those in the US, but to the entire world. We saw $16 trillion being given out during the financial crisis. Nobody was reprimanded. Nobody was asked any further questions. They just went on business as usual, and they have actually convinced the Congress, they've convinced the people that are involved that it is a bad idea to have the Fed becoming transparent. Such a joke. Consumer Price Index, the CPI, a fraudulent number, no matter how you slice it. But even by looking at this, since 1971, you might remember that when Nixon pulled the US and effectively the world off of the Bretton Woods Agreement and essentially said, look, we are defaulting, so we can't pay the bills, too bad. And what happened to the debt? I also want to note what they're saying here, 1913, the creation of the Federal Reserve. Ever since then, really, deflation has not really been present. There were times that we had seen deflation take place, not necessarily a 1929 style deflation in that way, but there were periods of time where people were benefiting from the deflation. It's not necessarily a bad thing. You may have asset prices deflating, but imagine this. If we see a deflation in real estate prices right now, let's say they were chopped in half. Well, ultimately, people can then go out and buy homes. That's a good thing. That's stimulation to the economy. Same with stocks. If they drop by 50% and you've got a bunch of cash in the bank, maybe you go out there and buy some stocks. So it's not necessarily bad. Of course, there's a million things happening, and I'm not factoring any of that in. I'm just trying to make a point. And then switching gears, retail square footage and sales per capita. Just want to note the fact that the US by far has the most retail square footage. And that's huge. You also have Canada not too far behind, Australia as well, UK, and so on. But just comparing Europe to the US and even Canada, it's ridiculous how much retail space is, and I can attest to that. Definitely, you go anywhere and there's massive buildings. Well, things are changing. The retail real estate glut is getting worse. Stores announcing 77 million square feet of shopping space so far this year. This year, 2018, we're in the 4th month. Look at the chart. Announced store closings, combined square footage, national and regional chains. This is only year to date, and already the trajectory is showing us very clearly that we will be continuing with this trend. Since 2015, 2016, 2017, and then 2018, massive store closures. It's not just Amazon, ladies and gentlemen. It is the economy. It's suffering. All of the programs ended in the United States, whether it was Clash for Clunkers, whether it was QE3, Operation Twist, the QEs before that. You can see all the different stimulus packages, the TARPs, and everything else, all the bailouts. That all ended. And then the economy was trying, and then it just struggled. And now you can see what's happening. Stores are going out of business. It's not just one or two big chains, okay? This is like an epidemic that's occurring today. And last but not least, I wanted to leave you with this. Profits of state lotteries in the United States from 2009 to 2016, they're increasing. There are statistics that show the majority of people who win the lottery end up losing it. Imagine that. They win millions and millions and millions of dollars, and they can't keep it. They are gambling, they get into lawsuits, they get in trouble with this or that, and ultimately, lose it all, and sometimes, more often than sometimes, they actually are worse off than when they started. I just read an article and connected with this. The gentleman said, I wish I had ripped up that ticket. And he had won, I can't remember the number, it was a massive number. We have to remember what to do with our wealth. We need to secure our wealth. That's why I believe in this whole methodology, this whole ideology of self-sufficiency. If you want to know more about self-sufficiency, I won't bore you on this video. I have a playlist on YouTube called How to End Solutions, where I'll get into that more. It's basically the money GPS strategy, where part of that is anyway, where I talk about in my second book. Okay, that's all for this video. If you found it informative, please give me a thumbs up. When you give me a thumbs up, it helps to support the channel. I do appreciate that very much. If you found the video informative, I know that you will find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. The first book is about the 4 asset classes and how to profit from it, whereas the newer book gets into familiar topics, but I also cover things like the money GPS strategy. If you want to flip through these books, just head over to Amazon. If you look in the links of this video in the description, the first one there will take you over to Amazon. You can actually flip through the pages of the books for yourself. Take care.